Buying the car is the part everyone talks about. Owning it is the part that keeps billing you after the excitement is gone. That is the hidden cost of car ownership. It is not one price tag, it is a whole system attached to your driveway. Cars are sold as freedom, convenience, and adulthood. Fair enough, sometimes they really are all three. But the financial truth is less cinematic. For a lot of households, the car is not just a tool, it is a second budget. And that second budget gets bigger quietly. A little fuel here, a tire there, an insurance jump, a weird sensor light, a repair you did not plan for. That is why people often say, my payment is manageable, right before the rest of the car starts eating their cash flow. This video is not anti-car. Cars can absolutely expand your life. They can get you to better jobs, safer neighborhoods, cheaper stores, and more flexible schedules. But usefulness does not make them cheap. And necessity does not make the system fair. Once you need a car, a whole chain of industries gets a claim on your future income. The dealer wants the sale. The lender wants the payment. The insurer wants the premium. The repair shop wants the fix. Even the government gets registration fees, taxes, and sometimes inspection costs. So the real question is not, can I buy this car? It is, can I carry the whole ecosystem that comes with it? That difference is where people get trapped. The sticker price is visible. The ownership burden is sneaky. A car payment feels clean because it comes in one monthly number. Ownership feels messy because it arrives in fragments. And fragments are dangerous. Small separate costs are easier to underestimate than one honest big number. Start with the basic truth. Transportation is already one of the biggest household expenses in America. Federal transportation data shows the average U.S. household spent more than $13,000 on transportation in 2024. That should instantly tell you this is not a side hobby expense. That makes transportation the second largest spending category after housing. That is not a side expense. That is a structural one. And for lower-income households with a car, the burden can become brutal. Federal transportation data also shows that households under $25,000 that own at least one vehicle can spend around 38% of after-tax income on transportation. That is the first hidden cost. Once the car becomes necessary, it can start acting like rent on wheels. You pay to keep it. You pay to move it. You pay when it breaks. You pay when someone else hits it. You even pay when it just sits there, because loan interest, insurance, depreciation, and registration do not care whether you drove today. That is why I barely drive does not always save as much as people hope. A lot of the ownership bill is fixed before the engine starts. And then there is depreciation, the polite financial word for your asset quietly leaking value. Some people never feel that loss because they drive the car for years, but the loss is still real, especially when you upgrade often. This is one of the weirdest parts of car culture. People treat depreciation like it is invisible, just because it is not paid as a bill every month. Now let's break the cost machine apart. The first obvious layer is the loan. Auto loans look manageable because dealers are very good at shrinking the conversation to a monthly payment. It is a sales trick because a smaller monthly number feels emotionally safer. That monthly number can hide a long loan term, a high interest rate, or both. Stretch the term long enough and almost anything starts to feel affordable. That does not mean it became cheap. This is where many households confuse cash flow comfort with financial comfort. They are not the same thing. You can survive the payment and still be buying too much car. You can also get trapped in negative equity, where you owe more than the car is worth. That trap matters because it poisons your next move. Selling gets harder, refinancing gets weaker, and the next purchase starts crooked. The second layer is insurance, and this is where a lot of people get ambushed. Insurance is not just a boring background bill anymore. In many places, it has become a real budget event, the kind that can wreck a month all by itself. Dallas Fed research noted that nationally, insurance premiums rose roughly 70% from 2019 to 2025. You may have done nothing wrong and still get hit with a higher premium because repair costs rose, climate risk rose, theft risk changed, or your ZIP code got uglier to underwriters. That is one of the coldest parts of the system. A car can become more expensive to insure even when your own behavior stays the same. The third layer is fuel. People love to joke about gas prices, but the deeper issue is dependence. If your life is built around driving long distances, fuel is not optional. It is a tax on your geography, your job radius, and your daily routine. And even when gas prices cool down, the need to fill the tank again and again keeps the pressure alive. The fourth layer is maintenance, which is where the car starts acting like a machine instead of an object. Oil changes, filters, wipers, tires, brakes, batteries. None of these are shocking alone. Together, they absolutely add up. Then there are repairs, which are maintenance's more violent cousin. The alternator does not care that rent is due. The transmission does not care that school starts next week. And modern repairs are not getting simpler. They are getting more computerized, more sensor-heavy, and often more expensive, which means the owner pays for complexity whether they asked for it or not. That is why a lot of newer cars feel less like machines and more like rolling software subscriptions with wheels. Even a small accident can trigger expensive recalibration work because modern safety systems have to be reset correctly. So, the cost of owning the car is not just keeping it running, it is keeping it digitally acceptable too. The fifth layer is tires, which deserve more respect than people give them. Tires are one of those costs that arrive in a lump, feel unfair, and are easy to delay right until delaying becomes unsafe. The sixth layer is parking, tolls, and the general price of storing movement. In some cities, the car is not just expensive to drive, it is expensive to put somewhere. The seventh layer is time. And this is where the story gets more complicated, because the car can both save time and quietly steal it back through breakdowns and logistics. Cars can save time. That is one of the strongest arguments for owning one. A reliable car can absolutely widen your job radius, speed up errands, and give families more flexibility. So again, this is not an anti-car sermon. The good side is real. The problem is that people often price the purchase, but not the stress. And stress matters because cars break on the worst possible days. They fail before work, before school, before appointments, before trips. Mechanical timing has a dark sense of humor. That means the car creates not just expenses, but volatility. And volatility is deadly for fragile budgets. This is why the hidden cost of car ownership is partly a class story. Wealthier households still pay for cars, obviously, but they absorb car costs differently. And that difference is exactly what turns ownership into a class story. They can pay cash more often, or put more down, or qualify for better rates. They can also keep a repair from becoming a crisis because they have buffers. And they are more able to choose location, which changes how dependent they are on driving in the first place. Lower-income households often get the worst combination: older cars, longer commutes, weaker credit, and less room for surprise costs. That means the car they need to stay afloat is often the same car that keeps shaking the boat. This is where auto ownership becomes a little cruel. The people who need reliability most often have the hardest time buying it. A newer reliable car costs more money up front. A cheaper older car may cost more in stress later, which is why transportation often stops feeling cheap very quickly. That is not a simple decision. That is a poverty pressure decision. People also forget the cost of the car after the loan ends. A paid-off car feels like freedom because one big bill disappears. That part is true. But insurance, fuel, maintenance, parking, and random repairs stay in the room. So paid off is not the same as cheap. It is just a different stage of the ownership story. This is also why status purchases can become financial comedy. What looks impressive in the driveway can become deeply unfunny in the budget. The nicer the car, the more every surrounding cost tends to get a little meaner. Bigger tires cost more. Premium parts cost more. Certain brands cost more to insure and fix. Even fuel economy can get worse if the car is heavier, faster, or built for image instead of practicality. This is the part nobody loves hearing. Some cars are not just transportation decisions. They are identity purchases. Identity purchases are not automatically stupid. Humans buy symbols all the time. But symbols are expensive things to finance at 7% interest. If the car is mostly there to prove something, you may end up working for your image more than your mobility. And when the economy gets tighter, image payments start feeling much heavier than image benefits. There is another hidden cost people miss: attention. Cars demand attention even when they behave, and that constant low-level maintenance of your life matters. You have to remember service dates, renew paperwork, compare insurance, watch warning lights, and manage repairs. A car is not just a product, it is a small management project, and every management project has cognitive overhead. That may sound soft, but it matters. Mental bandwidth is part of financial life. When budgets are tight, one extra machine to worry about can feel much larger than its invoice. So what should people actually do with all this? Start by changing the question, because a better question protects you better than a louder sales pitch. Do not ask, "What monthly payment can I tolerate?" Ask, "What total ownership cost can my life support?" That means looking at the loan, yes, but also insurance, fuel, maintenance, repairs, taxes, parking, and depreciation. Before buying a car, get the insurance quote first, not after. First, a car that looks affordable can become silly once the insurance number lands. Second, keep a repair buffer if you can. Even a modest car emergency fund changes the game, because surprise repairs stop becoming moral emergencies. Not because it makes repairs fun, it makes them survivable. Third, be suspicious of long loan terms that make expensive cars look harmless. A lower payment is not always a better deal. Sometimes it is just a slower trap. Fourth, if you mainly need transportation, do not let status talk you into luxury maintenance. Do not buy the maintenance lifestyle if all you needed was mobility. Reliable and boring is underrated. Boring can be beautiful when it protects your cash flow. Fifth, look at your geography honestly. In some places, a car unlocks life. In others, it mainly drains it, especially if the commute and parking costs are brutal. If you can reduce miles, reduce commuting, or reduce the number of cars in the household, the math improves fast. That does not work for everyone, but when it does, it matters more than people think. The deeper lesson is simple. The price of mobility is not just the price of the machine, it is the price of everything that has attached itself to the machine. So the final truth is this: a car can expand your freedom, but it can also quietly rent a large part of your future income. The machine gives mobility, and the system around it sends the invoice. That is the hidden cost of car ownership. Once you see the full system, you stop asking what the car costs and start asking what the car keeps costing.